Hi friends, once again welcome back to Roji Share Tips. In today's video, we are looking at the share analysis of Happiest Minds. The reason why we are doing the share analysis right now is recently the stock price has got a very solid correction, but still the stock is highly overvalued. In that case, I only recommend the stock for long-term buyers, and there is nothing for short-term or medium-term opportunity. It is only for long-term. Business model of the company is IT services, and it mainly includes blockchain technology, cloud, and robotics. And this sector has a very good growth potential, as we all know. Market cap of the organization is 18,878 crores, showing that it is a mid-cap stock right now. That means company is firmly established in the market. The current market price is at 1,282, which is a 19% discounted price from its all-time high of 1584, happened on 2021 July. The present book value is only 39.8, which is just 3.1% of the share price. That is considered as very low book value. Face value of the share is just 2 rupees, showing that a stock split may be possible in another 3 years. Dividend yield is 0.23, means you will get 23 rupees returns per year for every 10,000 rupees invested, which means the dividend yield is very low. If you look at the bonus history, you can see no issuance so far. Hence, holding the stock for dividend and bonus doesn't make any sense. If you look at 12-month returns, it is 301.64%, which is very good. 5-year returns is not applicable because the share got listed recently, and maximum returns is only for 14 months, which is 256.01%, which is also very good. Inventory turnover is not applicable for the stock, and pledge percentage is 0.00, showing that company hasn't pledged any of its shares. Earnings per share is 11.0, which is only 0.85% of the stock price, and hence it is considered as very low. If you look at ROE, ROC and ROA, you can see 39.9, 34.5 and 22.9% respectively, which is considered as very good. If you look at debt to equity, you can see only 0.35%, which is also very good. Debt to profit is only 1.27, which is okay. Promoter holding is 53.25%, showing that promoter has very high confidence in this company. If you look at the contribution of DII and FII, it is 2.07% and 7.05% respectively, showing that company is attractive for investors. If you look at the stock P, you can see it is 116 against industry average of 30.4, showing that share is largely overvalued, highly overvalued. In this case, I only recommend the stock for long-term buyers only, and those who look for medium-term and short-term should never enter into this share. In last 3 years, company made consistent profits with regular growth, showing that your investments is absolutely safe in this company. Reserves of the company is 518 crores, increased from the previous year value of 220 crores, showing that company has sufficient reserves to handle all kind of economic shocks. Cash flow is found positive, but at the same time, debt is also growing. However, at the same time, some money is also allocated for investments. Overall, it is looking positive. Chairman of the company is Mr. Ashok Sudha, age 79. He got a bachelor degree in engineering from Institute of Roorkee, and presently this institute is IIT right now. And he also got an MBA from Philippines. He got 30 plus year experience in IT industry, previously employed in Mindtree, Wipro, etc. The MD of this organization is Mr. Venkat Raman Narayan, age 50. He got a bachelor degree in commerce, and he is also a chartered accountant, and he also has 25 years plus experience, which means this company is headed by highly experienced and qualified personnels. And we can see this company got a 4.3 rating in Glassdoor, and also showing number 2 in Indian IT sector. That is very positive. 73% of the revenue comes from US, and company is spread across 7 countries. And we can see company has 1 subsidiary and 0 joint ventures. Information available in annual report PDF page 82. But in the internet, it can see 3 subsidiaries. Organization is headquartered in Bengaluru, and now if you look at the remuneration paid to the directors, 36 members, is only 4.4 crores. Information available in annual report PDF page 132. That means only 2.72% of the profit is taken as director salary, which means company is not mismanaged. If you go to annual report page 82, you can see subsidiary company title, and you can see as of 31st March 2021, company has 1 wholly owned subsidiary, that is Happiest Mind Inc. USA, formerly PGS Inc. This is the only subsidiary company has. Now if you go to page number 132 of annual report, you can see the salaries of all important directors, that is 6 numbers. Company is founded in the year 2011, that is 10 years of existence. If you look at the recent financial results, you can see quarter 2 2021 showing a net profit of 44 crores. On the previous quarter, it was only 35 crores. Now, if you look at the previous year same quarter, it was 34 crores, which means quarter on quarter there is an increase of 25.7%, and year on year there is an increase of around 28%. And this is looking positive. This year 2 dividends has been issued, total of 4.75 rupees has been distributed, and the last issue of 1.75 happened on 9th of November 2021, that is this month, and no further dividend is expected this year. Going to the technical part, you can see the 200 exponential moving average line is clearly below the price line, and you can see a large scale consolidation as well, right? Or the price is consolidating at this point. If you look at the 48 and 13 exponential moving average, you can see a negative crossover at this point, but it has been neutralized, and now the 48 exponential and 13 exponential moving average looks neutral. Now if you go to MACD, you can see a negative value, but the MACD is also showing neutral. It's a straight line, it's not pointing upwards or downwards. Now if you look at stochastics is bullish. Now if you look at RSI is neutral. So based on the technical indicators, what I understand is share is expected to consolidate for some more time, and after that it will gradually recover to its previous levels. But it is going to take some serious time. We cannot say in short term or medium term it will happen, but in the long term definitely it will go up. The same thing is mentioned here as well. 200 exponential moving average is bullish. 13 and 48 exponential moving average is neutral. Current price is somewhat okay only for long term purchases. As I said before, it is only for long term purchase. MACD is negative but looking neutral. Stochastics is bullish. RSI index is perfectly neutral. Based on the technical indicators, price may consolidate for some more time and continue going up slowly. The breakup comes like 35% bullish, 10% bearish, and 55% neutral. Hence, Q2 results came positive. Share is expected to gradually recover to its all-time high slowly. Main concern of the stock is its excessive P valuation. Hence, investors should wait for a better entry. Follow buy on dip strategy is okay only for long term. Support can be found at 1238, 1178 and 1128 levels. Any price around or below 1238 will be fair entry. Opportunities only for long term, as I said before. Between 1180 and 1200 will be much better entry. Minimum and maximum long term portfolio allocation will be 1% and 3% respectively. That means you can buy up to 1 or 2 quantity for a portfolio size of 1 lakh. Immediate target as expected is not applicable. Medium term target is also not applicable. Only applicable target is the long term, which is 1500. If you found this information useful, please like this video and subscribe to our channel. Thank you for watching.